Hey guys, Joe Frank here, market analyst for YouTrading, and in today's video we're going to be taking a quick look across markets, talking about some of the themes that are driving things at the moment, and talking about what could be coming up for the rest of the week. So to start with the main headlines, I mean, there's only really two things. Let me show you oil, which jumped higher. It's going to load. There we have it. Oil currently US, this is CFDs that track the front month future of the WTI, US oil up over 6% on the news. The surprise news over the weekend that OPEC is going to do an output cut additionally to the 2 million that they're already agreed to do. They're going to do a further approximately 1.1 million, 500,000 from the Saudis, a big chunk from the Russians as well, and a fairly decent chunk from a bunch of other countries that are joining in too. This is because, I mean, we had this breakout to fresh multi-month lows recently. We had the US pretty much saying that they're not going to fill up their strategic reserve in the near future, which seems to have pressed OPEC into action to try and stem this tide lower in oil. But as you can see here, there's this key support term resistance area around 82, which we haven't been able to get to and test. And, you know, in wake of this OPEC surprise cut, we have got a lot of oil analysts talking about how we're going to maybe hit 100 again, or get at least into the 90s. But the global macro picture remains pretty ugly, which I think is going to continue to remain a pretty important headwind for oil. Like, yes, okay, OPEC can support us a decent amount in the short term. Maybe they can keep us in this range here, which we broke back into, despite weakness in the global macro outlook. But I'm not sure we're going to be able to, say, get above this 200-day moving average here around 84. Remains to be seen. But feeding into that argument about weakness in the global macro picture is look at this ISM numbers that just came out of the US. 46.3 for the headline ISM Manufacturing PMI number, below the expected 47.5, below last month's 47.7. Shows that US manufacturing in March in recession or in contraction in terms of activity at least. And if you look at this prices paid index as well, which is like the gauge of inflation in the manufacturing sector, it's below 52, which also signals outright deflation. So that has triggered a reaction across other asset classes as well. We had yields initially moving higher because of the spike in oil prices, which initially sparked some concerns that inflation is going to remain stickier at higher levels and the Fed might have to do a little bit more tightening. But in wake of that data, we've seen a complete reversal. You can see the 2-year yield is now back below 4%, having been to around 4.15% earlier in the session, back below its 200-day moving average. Let's have a look at the 10-year as well. Internet seems a little bit slow. There we go, 10-year down about 5 basis points, below 3.5%, haven't been at around 3.55% earlier in the session, also below its 200-day moving average. I mean, you got to think that yields, if the US data is going to continue surprising to the downside, yields are probably going to continue weakening. And by the way, bad news on the economy seems to be being interpreted as good news for the stock market if it means a more dovish Fed. You can see the S&P 500 advancing up about 0.3%, testing the upper bounds of this trend channel that it's been in for the last couple of weeks. The door, in my opinion, very much seems open towards a retest of 4,200, perhaps this week. If we get more weak US data, we're going to go through the upcoming events this week in a minute. Obviously, NASDAQ going higher as well. You know, both of these major indices, well, actually, NASDAQ's still a little bit lower, but it's reversed higher from recent lows. Ooh, that's a messy chart from a trade idea video I did last week. But also, I think this could continue grinding higher too. What about gold? Reversed and pushing higher again in tandem with yields reversing and going lower again. Bitcoin holding around 28K, you know, it's monitoring the situation with yields, the dollar, the potential bank crisis, US recession, what's happening with risk assets, stocks, so seems pretty neutral at the moment. And speaking of the dollar, let's take a look at the Dixie, which you can see had a safe haven bid on the concerns about OPEC, but now pretty much reversed that and could possibly break below recent lows in the 102 area, opening up the door to a retest of recent lows under 101. So that's all the major asset classes at the start of the week. Those are the two major news stories, OPEC and the weak ISM data. So let's take a look at the calendar again. And because we do have some important stuff coming up this week. RBA, RBNZ, both with rate decisions. Well, RBA's on the Tuesday Asia Pacific session. RBNZ's on the Wednesday Asia Pacific session. One is expected to hold, the RBA. The other is expected to do a 25 basis point hike to 5%. Then focus returns to the US. We've got ADP non-farm employment change data, which is like the preliminary estimate, basically, of the official non-farm payroll data, which is out on Friday. This, of course, is the major focus of the week. Obviously, unemployment rate, average hourly earnings growth is going to be in focus as well. But we also have on Wednesday, ISM Services PMI, which is going to be very, very closely watched in wake of this week, ISM Manufacturing PMI. Also, Canadian jobs data out on Thursday, and weekly jobless claims in the US out on Thursday too, which is always worth monitoring. And Friday is a weird one, by the way, guys, because basically US markets are actually, I think the bond market's open for half a day, but US stock markets are actually closed. So it's going to be a bit of a strange trading day, low volumes, people away on holiday, but people still kind of monitoring the NFP data. But that's pretty much it, guys. That's some of the main themes we've got coming up this week. I hope you all enjoyed the video. I hope you all found it informative, and I will see you all in the next one.